Hello, everyone. Good evening. Welcome once again, and thanks for joining on uh, today evening. And today we would be discussing, we would be assessing the Trump effect with Ritesh Jain. So we have had a couple of earlier discussions on macro topics with Ritesh, and our audience certainly like those sessions. And time and again, people reach out to me to request Ritesh to have a session, and today is a good day to have his views around the US elections. So that's why I reached out to him. And thank you, Ritesh, for agreeing on such a short notice. And just to tell a little bit about Ritesh, so Ritesh is a macro trend watcher and a strategic advisor. He's founder at Pine Tree and NRIZEN. So Ritesh, I straight away hand it over to you to add to your introduction and maybe a monologue around the US election result and where we are heading, if you like to talk about.
Yeah, I think the introduction part everybody knows about who's on this call. So I will not talk more about that, except that Pine Tree has now completed 2 years and 2 months. And it has been a phenomenal 2 years where we've built up performances. Anybody interested in knowing that thing can write to me. I send newsletters and also you can read all about it. NRIZEN is for NRIs to invest in India, in Indian mutual fund, because I believe over the next few years, huge amount of money will be made in India, but not in yesterday's India. Tomorrow's India is completely different. So I have a curated basket of funds which think alike, same thinking like me. So I have a basket of those fund which we recommend. But for that, you have to be registered on NRIZEN. Now let's come to the presidential election. Now, before anybody says, how does it matter? It's a democracy. Presidents come and go. What has changed in the world? But that is not true post-COVID. Why it is not true post-COVID is simply because governments have become bigger after COVID. Government spent a lot of money. Government took away a lot of power from people, and governments don't want to give back the power. What you are seeing in India with Mr. Prime Minister Modi, you are seeing exactly the same thing with Prime Minister of Canada, Justin Trudeau. You are seeing with Mr. Macron in France. So why not seeing the same thing with something like President Trump? It's a person who has, for the time being, become bigger than the country. The person who's deciding winners and losers. So it is very important for us to know, to understand the policies which Mr. President Trump will be having in his this term. And I have very, very clear views on what is going to happen in the coming years. First of all, his administration, exactly same way when Mr. Prime Minister Modi came for the first time, his administration was completely different than the administration you see of Prime Minister Modi now, because he's learned during that time that who he wants. Earlier you used to listen to bureaucrats, now you want to listen to yourself. You've understood this thing. So you have the people around you are different. Last administration, President Trump had neocons around him, people who wanted to start war. For every small thing, they would want to rush for a war. So they used to look outward. They never used to look inward. This transition team of President Trump is completely different. This transition team of President Trump is actually looking inwards. This is a transition team of President Trump, which thinks exactly like President Trump thinks, and he thinks that America should not be fighting never-ending wars in the world. America should not be present in every small country. America should be industrializing itself, and our jobs should not be going abroad, and there is no place for illegal immigrants in our country. What does that mean? That roughly means that US will be embarking on a major reindustrialization over the next few years. Okay, they already started in bits and pieces over the last 2, 3 years, but it was not a policy. It was more of, the CHIPS Act and the IRA Act came out of COVID, but it was not thought through properly. So here you will be having a policy which will be US first, American people first, and US reindustrialization. What does US reindustrialization means? There are some reports from Morgan Stanley which says that it could be a $10 trillion opportunity over the next 7 to 8 years. Let me read from that slide which I gave it yesterday at some of the CEOs conference. So let me just so following 2 decades of underinvestment and stagnation, we believe the US is in very early innings of reindustrialization, a multi-decade opportunity that we size at over $10 trillion, incremental IP plus capex. Our US reshoring thesis is underpinned by structural tech advancement and a heightened focus on operational resiliency following the COVID pandemic and subsequent supply chain disruption. And the last one is very, very important. Gone are the days where global manufacturing chased low-cost labor. Moving forward, we believe capital and proximity to the end user will dictate the regional allocation of capex, parameters to which the US has no equal. So we are going to have a world where US will reindustrialize, will want to reindustrialize. For reindustrialization, they need 3 things. The first thing is lower US dollar. Think about it. If the US dollar is higher, Taiwanese dollar is lower, South Korean won is lower, Indian rupee is lower, none of the corporates from those countries will be able to invest in US. So you need lower dollar, you need lower US bond yields. But what you are seeing today is completely opposite of that. So if I'm looking at the end game is US in reindustrialization, that means lower US dollar is coming and yield curve control is coming. Secondly, if anybody believes that US is going to put tariffs on China, I don't agree with them. They might have stated that policy. Think about it. Go back to what India has done. India had a border dispute with China. We even told China to sell its fintech company's stake in India. But over the last few months, I've been writing that India-China border dispute will be solved. Why? Because ultimately, for China, it is more, they would make, it is more beneficial for them to have a better economic relationship with India. Indian corporates don't want to invest. Maybe they've become bloated, technology-wise they are behind, whatever it is. China is far ahead of India in technology. So what do? We solve the border problem and next day we invite China to invest in India. So there's a $100 billion trade deficit with China, India is having. What you will see over the next few years is Chinese companies will be having joint ventures with Indian companies, make in India, make for India, and export from India. That way, a lot of people in India will be employed. You might be paying the royalties to the Chinese companies, but this is a way of solving the trade deficit problem. Now, US is having exactly the same issue with China, what India is having the issue with China. India actually had a border dispute also. But for US-China, it is not a border dispute. It is a great power competition. But I strongly believe over the next few months, you will find policies where US might put tariffs on Chinese imports, but it will invite Chinese companies to invest in US to make, and that is a goal for US reindustrialization. So this is what I believe will happen. Third, what I believe will happen is massive spending on defense will take place. There are a lot of small Indian defense companies or small part manufacturers which will be massive winners. Why the defense spending will take place? Because over the last few years, US as a fatherly figure has been spending more, whether it comes to NATO or it is, giving a military umbrella to South Korea or Japan. But President Trump in the last, his last time in 2020 itself, he was saying, we don't want to do this thing. We don't want to run the world. You should take care of your own security umbrella. So coming few years, Europe has understood today itself that they need to spend more on military. Plus, Mario Draghi has also come out with a paper where they want to do reindustrialization again. So Europe will invest more on military. Canada will be told more to invest in military. Japan will do it. South Korea will do it. They will all invest more on defense. Yes, the large defense orders can go to US manufacturers, but small components, they will not go to China. It will actually go to India. So this is one place where I've been very bullish for some time. Okay. There's one different view I'm having, which nobody's having as of now. I believe the biggest beneficiary of US reindustrialization will be Canadian resource sector. US, in my view, so what will happen is I believe that I'm firmly of the opinion that if we have President Trump in the White House, then Canada, whoever is in power in Canada does not matter to me. will be forced to accept whatever role the US assigns to Canada in the US quest for reindustrialization. And what is Canada good at? Canada is having resources. Our current policies don't allow for resources to be extracted, but I can assure you those policies will be changed because Canadian policies are run by Americans. They're not run by Canadians. So all in all, coming years, the only thing you need to keep in mind is that US bond yields will start revolting. UK has already started revolting. Germany has started revolting. So US bond yields will start revolting. They're already doing it. At some point of time, if the bond yields are not capped, you could have a knee-jerk reaction in the market, in equity asset markets, where they will not like rising bond yields. It can happen anytime simply because the existing US government has no interest now, because they are now being changed by the next government, has no interest in maintaining the sanctity of the market, or, to maintain the liquid markets. So although it is all a euphoria as of now, for the time being, I would just caution that keep an eye on the bond yields, because rising bond yields can, put all these plans on a spanner for President Trump. But having said that thing, I think they will come out with a yield curve control policy, or they will find a way where bond yields don't go up. And that is only possible if dollar also goes down. So all in all, over a period of time, massive new winners will be made across the world. Keep an eye on the defense, the entire, the defense infrastructure kind of theme. Okay. And and it is India also, I think, is going to be a big beneficiary, although it will be a transactional relationship. You give me something, I give you something. But all in all, President Trump in White House is much more beneficial for India than President Harris in White House for India. So yeah, so this is just
Right. Right, Ritesh. So, Ritesh, would like to appreciate your view on how going forward the debt to GDP going to be for US. Is it going to stay at the levels it is, or and you have some view which can help our audience on that?
yeah. So 1944, when they were getting out of World War II, US debt to GDP was 130%. Today, US debt to GDP is 120 to 225%. They went for reindustrialization at that point of time. Within 4 or 5 years, their industrialization rate went up by 60 to 70%. They capped the bond yields. Dollar remained low. It was pegged dollar at that point of time, but dollar remained low. Inflation went a little bit higher. People got jobs. So think about in US, even in India, if you have jobs, you don't care whether the inflation is 3% or 5% or 7%, as long as you have a job. So this is what you are going to find: higher wages in coming time. Okay. You will find that they will find a way of capping the bond yields. They will focus on nominal GDP. As long as your nominal GDP is rising higher than the debt creation, your overall debt to GDP will come down. So I believe over the next 4, 5, 6 years, you should be investing based on nominal GDP, not as real GDP, because they will try to inflate away the debt. They're already on record of that thing. And for that, you require lower dollar, you require lower bond yields, and both these things mean the money will move out of US equity markets to rest of the world, including some of the Indian assets which are aligned to this reindustrialization views.
Right. And there are apprehensions about how IT sector going forward will do, because in the past also Trump was against obviously the biggest beneficiary or are Indians, be it H-1B visa or kind of IT related jobs, right? So do you see going forward something materially or structurally will change in IT sector, or that is not the right assumption on that front?
So I have a very strong view on one other thing. I believe US mega cap tech sector will be under pressure. US Justice Department will be weaponized against US mega cap tech companies. So this is on the US mega cap tech companies. On India, I can only tell you what President Trump said just 3 months back when a question was asked about India. they want to deport, and Vivek Ramaswamy also talked about it. If you are an illegal immigrant, you are being put on notice. Over the last few years, what has happened is highly educated Indians have not found way to come into India, but illegal immigrant is what has gone up, and the same thing is trying to happen in Canada also. That will all reverse. President Trump, in my view, will create conditions for highly educated Indians to come and participate in US growth rate. And that means H-1B visas holder also.
Right. So Shantanu has one question. He's asking, should any Indian sector accept any kind of anti-dumping duties?
Look, I have a view on three sectors for the last few months, and I will continue talking only about that because I am not investing outside that. One is the electrification theme. You cannot manufacture in India unless you have a cheap and reliable energy. Second is defense tech. And the third is tourism. But the problem with tourism is that the capacity constraints. I cannot talk about more than that. That is only for, let me put it this way, I have not done work beyond that.
Right. And as you very detailed explained that US is going to pursue a policy of America first, what other repercussions or we can have with that, at least in Indian context, if not globally?
Look, you should have, I think on a day when people are, President Trump actually made a statement which mentioned a country known as Bangladesh. Think about it, a $26 trillion economy. The next president is talking about Bangladesh. Okay. In my view, when I look at the personalities, it is very important. In today's work, personalities should matter. President Trump and Prime Minister Modi has exactly the same kind of personalities. Okay. Both of them think first about their own people. Okay. They want to industrialize. Both of them want to industrialize at the same point of time. Okay. I think India will do very well with President Trump in White House. Having said that thing, it will be a transactional relationship. You give me something, I will give you something. There is nothing free, but India never got anything free from US. Never got anything free from US. But President Trump in White House is far better for India than President Harris in White House.
Right. But do you find like Modi, although that might not be related directly to the topic, but do you find Modi more well placed in bargaining with Trump going forward, or that would be a wrong assumption?
I have no views about that. I am telling you, he's a businessman, transactional relationship. We will have to see the new transition team. We have to look at what they want to talk about. Look, we all know about JD Vance. We know about, Tulsi Gabbard. We know about, Vivek Ramaswamy. We've heard them. Let's see their first policies. The overarching policy from 30,000 feet is very clear to me. But you're asking me at the micro level, for which I do not have an answer because I do not have the sufficient data for me to make a view.
Fair enough, Ritesh. So, Ritesh, many comments around gold and silver. So, would appreciate your views going forward.
Correct. So, it was a crowded trade, and even before President Trump came in, it was very clear that if he is the winner, money will move to Bitcoin because Mr. JD Vance, Mr. Trump, and Vivek Ramaswamy attended a Bitcoin conference, and the previous administration, the SEC chairman, was against Bitcoin. He was, so this administration is pro Bitcoin. So you found Bitcoin breaking out to an all-time high. Secondly, at the same point of time, US bond yields are rising. When US bond yields start rising and dollar starts strengthening a lot, you could have some kind of small problems, which you are seeing in gold, silver. Excesses are getting out, which is a good thing. So, but I don't think that if my view is that dollar is going to be lower in coming years, if US bond yields will be capped, then all roads lead to gold, road leads to Bitcoin, to US industrials, Indian industrials.
Right, sir. So another question is on the commodity. So he's asking the views on the commodity sector going forward, ferrous and non-ferrous, and factors affecting the sectors, be it positive or negative, in case you want to take this.
Yeah. Europe want to industrialize, US want to industrialize, India want to industrialize, and now China also wants to industrialize. How can you be negative on commodities? But what commodities is a very micro question on which I would cannot answer, or I will not, at this point of time have strong views. So because I'm a macro investor, we do investment only through an ETF. So we do not go into this ferrous, non-ferrous, and individual. But honestly, on the face of it, aluminum, copper, they look very, very good to me.
One question is around the impact on the solar companies of India with Trump company.
Yeah. Actually, solar companies in India will also get impacted because of Chinese manufacturing. We should not, they might be falling in sympathy of what President Trump has come. But if you have good relation with China and you allow Chinese to come and invest in India, produce in India, then it is a very good example in front of you that some of the sectors in India will face declining profitability if we allow Chinese to come and invest in our country. Solar is one of them.
Right. Satisha has a question. With this move, there may be multiple manufacturing centers in the world, including the US. What is your take on interoperability? US was pushing for standards favoring itself till now.
Yeah, it will still continue. So we will not be able to do what US is doing, but we can get a small part of what US is doing. There is not everything US can do. There is not capability in US to do each and everything. So whatever US cannot do was supposed to go to China. Now even Europe cannot do anything. A lot of Japanese work is now coming to Indian Indian engineering companies. So you have to find out whichever is the one, where India stands, to gain. And I think there are enough opportunities over there.
Right. Certain more questions. Let me see. Okay. Now, since Elon Musk is in good terms with Trump, can we expect Elon forcing India to allow selling Tesla in India? Then what can be the effects on the Indian auto industry? Yeah.
You are absolutely right. I was thinking exactly on the same terms. We did not give favorable terms to, Tesla. So now, if we have to negotiate or US were to negotiate with us, it is possible they will ask us something more. Okay? And yes, they can ask us, much more favorable terms for Tesla. And if it is a give and take relationship, we might have to agree to some of these things. Whatever said and done, US is the reserve currency of the world with a $27 trillion economy. So I would be keeping an eye on this thing.
One question is, what is your view on US-Russia relationship and BRICS?
So BRICS will continue because for the simple reason, US is withdrawing from the world. US is saying, "मैं थक गया हूं." I do not want to take responsibility of the world. I want to take responsibility of the people who have voted for me. These are the people who lost their job because of globalization. For me, the new globalization is bringing these factories back to US and giving jobs to my people. And that roughly means that if US is not willing to share its GDP with rest of the world, then why should be using US dollar over a long period of time? And that is the field is open for other people to jump in, which includes BRIC, which is one of the more serious threat to them.
So Ritesh, one quick question before I go to Sandeep and Prashant. So do you find any impact on Canada of this election or nothing material
Very
changes?
positive. We will not do any change ourselves. There is a US, Canada, Mexico, USMCA agreement. That agreement, and actually US is the largest trading partner for Canada. But Canada has systematically over the last few years, our policies do not support our resource sector. I believe in the brave new world of US reindustrialization, there is some work which will be assigned to Canada. And that work will be extraction of resources from Canada. So I believe it is going to be very, very positive for Canadian economy, Canadian resource sector, and I think it is, people should be looking at it in a very, very positive way in the coming years.
Right. Sandeep?
Hey, Prince.
Yes, Sandeep, we were discussing about this. So, any questions or any quick thoughts? So,
No, I'm good. I
okay,
think let Ritesh take those questions and answer. Ritesh, pleasure, interacting with you. But let me be on the backside, and I surely have few comments. But I'm in uh, heading into a tube, Prince, so
right.
networks will be very choppy.
So,
So don't want to
right.
disturb.
Ritesh, another question is, so we are saying a war economy nation is going to overnight turn into an industrialized economy. Views, please.
Yeah. Yes, it will. Simply think about it. If the US military umbrella is not available to Europe, it is not available to Japan. Canada is told you've not spent money in NATO. Do you remember that clip in United Nations when President Trump was talking about, NATO, and there was a German delegation which was laughing at President Trump? All these things have to come back. Systematically over the years, US allies have underinvested in their own defense and have actually outsourced their defense to United States. The new United States under President Trump will not be having that military umbrella without a give and take. First, they will be told to increase their defense spending. And then, as more and more countries realize that they cannot depend upon US military umbrella because US wants to industrialize itself, then they will have to embark on their own industrialization. So what do we call it? Industrial economy for US and industrial military economy for Europe, Japan, South Korea, for its allies.
Right. So one question is on Biosecure Act and CDMO companies. So how it will pan out under Trump?
No views. I have not been able to build up my knowledge on that sector, so I cannot answer that question.
Here, there is a new trend in India starting GCCs for US-based company. Will
Yes.
there any be impact
Yes.
on this trend?
No, it will be very positive. US has a population of 300 million, 330, 340 million. Okay. US does not have the capacity. Okay. So whatever they will have no problem on this outsourcing part. The only problem will come if US dollar were to fall a little bit more. At that point of time, I do not know what will happen, but GCC will continue in my view. As of now, I believe GCC will continue simply because there is too cost effective to be in India.
Right. Another question is from Suraj. He's asking how inflation will be there in 2025. Vague question, but again, if you want to take it.
Yeah, I believe that inflation is bottoming over here globally, and central bankers should not have cut the rate. In the next 3-4 months, you will find that the inflation is bottomed and it will start rising again. If I were to put a number, US inflation in 2025 should average between 3 to 4%. So whatever rate cut you are seeing now, for the time being, enjoy those rate cut, but yield curve will blow up. That means the long bond yields will start rising dramatically. Indian central banker is actually seeing that thing. So although there is a slowdown in India, but we do understand that if you cut the rates deeply, long bond yields can get out of your hand, which is happening in UK, Germany, France, and now US.
So one question is around EV chemical companies, Ritesh. Would there be any benefit for those companies or views?
No view. I don't have any view.
And one very basic question, I think couple of DMs on that. FIIs, with a view of 6 to 12 months from here, do you think FIIs will come back?
Okay. This is a very good question and this is a very broad question. First of all, there is enough data on NSE website. What were FIIs holding 6 months back? What was their percentage holding in a particular sector? What is their percentage holding? What you will find is they are selling Sectors which were yesterday's winner, which were having a massive weight in the benchmark. Whenever we talk about FIs 2-3 years back, what do they used to own? The same old companies. But India is no more going to be a consumption economy. India is going to be production economy. Now go back to that NSE website, take out the chart. There are few sectors where they are increasing their weight. Rajiv Jain yesterday mentioned it. Actually, I put it on my Twitter. So don't look at FI as a whole. Look at where are FIs selling and what are FIs buying. Unfortunately, they have yesterday's winner. They have no choice. Sorry, yesterday's winner. They have no choice but to sell yesterday's winner because now they are also realizing they might not be tomorrow's winner. Listen to Rajiv
So
Jain.
yeah.
He has explained it very well. His interview yesterday, I put it on LinkedIn and Twitter. You can just listen to him. It's a 2 minutes. He's explained it very well.
Right. Another question is your views on Quad Group and expansion of BRICS.
Too wide a question. Just it will take too long a period of time. I might have to write an entire post on that. So I would avoid that question as of now.
Sure. So follow up on that, GCC question is asking, is there a chance of having India plus one kind of GCC setup similar to China plus one?
Actually, there is, if you see it, there is small work is going to Vietnam, Philippines. Now it is going to Argentina, But the pushback I keep on getting where I say, the work is going, there is India plus one is becoming a reality. The pushback I'm getting is these countries are too small. They have too small a population and those working age that they cannot make any dent to India. That is a valid argument in my view. So yes, Philippines is much cheaper. Vietnam is much cheaper. Maybe Malaysia is much cheaper. Argentina is certainly much cheaper. People have started speaking English over there. A lot of work is going on. I know of big 5 work from US is moving to Argentina. I know some Google work is moving to Argentina. But having said that thing, there are just not enough people over there in those countries to make a meaningful dent in India as of now.
Right, Ritesh. So Gaurav,
Prince,
Sandeep,
can
please.
I
Please go ahead.
Prince, can I add on this GCC?
Yeah.
I think this one misconception which we have is that GCC is primarily outsourcing or some kind of a cost arbitrage. Obviously, that is a trigger, but that used to be a major trigger, let's say 20 years back, right? So when 20 years back things started, I mean, there were no GCC, frankly, there was primarily outsourcing via vendor, etc. And there were KPOs and there were ITs, right? Now the kind of GCC which is coming in India, they are coming also because of talent.
Okay.
The kind of talent which you can get in places like Bangalore, Hyderabad, Pune, and part of India, other part of India, you cannot even get those kind of hardworking talent in anywhere. Forget about places like Argentina, Vietnam, etc. Even in places like London, New York, etc. Right.
Okay.
So when these major organizations are setting up these GCC, they always have a choice to go to Indore. Why are they not going to Indore? Right? Why are they not going to Lucknow? Because cost is not the driver.
Okay.
In fact, to our surprise, we probably don't even realize we obviously have zero manufacturing, right? And probably decades away, and it may not even happen, or it may happen in 5 years. No one knows. But even on the semiconductor, something as critical as which like entire world talks, and we blindly assume that India is zero, the number of people working in Bangalore in some of these GCCs and literally contributing to some of the latest work is phenomenal.
Okay.
So when we think of GCC, we should not see it as a replacement of, CTS guy, the whatever work was CTS and Infosys doing now suddenly Credit Suisse and Deutsche Bank and Goldman is doing in-house. That insourcing is for sure happening. And the logic is very simple, Prince. Because initially when these companies were trying to come to India, they didn't have the local know-how. So they obviously needed a local partner. But once 5 years, 10 years happened, they realized they can do their own, hiring. They've developed all those kind of a thing, and it's probably much easier to manage in-house those capabilities, right? And especially if it requires certain kind of a regulatory scrutiny and those kind of a thing. So even in banking or in pharma, there was a lot of pressures by US regulators also, like, okay, you go, these offshore locations, but don't go via vendor. Why don't you just set up yourself? So we try to summarize some of these trends in, 5 minutes talk and try to understand the delta, but these are decadal change happened year after year. And now we are in a position where a company like, let's say, Google cannot say that I'll not be in India. And Google will not do India plus one and suddenly go to Argentina. What will they do there? Their only choice is best of the best talent, which they get in California, which they are getting in part of, southern USA. I mean, let's say anywhere in Florida, Austin, East Coast, etc. Or they straight away come to India. I mean, not to say they can't find similar talent in Eastern Europe or for that matter China, but those are not. I mean, China is not a friendly location for strategic reasons. They don't want to go there, especially. So when we compare GCC, we should imagine it as a human talent outsourcing. It's not a manufacturing thing like you move it for 20%, because you these organizations actually want to pay top dollars. The kind of salaries these GCC give in Bangalore, you're not here for cost arbitrage. They're literally paying 30-40% extra from the average Indian IT company giving our Indian tech company. In fact, IT is a misnomer to call it for GCC. Within GCC, there is a lot of research work happening across industries. I mean, even GE has a very great setup. Honeywell has a setup. So everyone is just not doing coding here also, and not even talking about business processing, which is a quite a bit. I mean, I'll tell you, between these 5, 6, 7 major banks, Goldman, JP Morgan, Deutsche Bank, Credit Suisse, UBS, all these sort of banks such as VC, etc., we easily have anywhere between 4 to 5 lakh people working. I mean, in fact, probably a million. That includes obviously operational part also and IT also, but that also includes a lot of functional knowledge, where their counterparts in locations like London, New York, Hong Kong are probably not as capable as some of these guys, being in Powai or anywhere. So I'm just saying, when we think of GCC, we should not see it as some kind of a cost arbitrage or some kind of a BPO and KPO. This is one little less understood story in India. In fact, Lata Venkatesh has very much highlighted in last few years that whenever we are talking about this CAD, etc., what we are missing is that a lot of our growth is coming because of this GCC. So she has done quite a bit of tweets around it, that trend. Obviously, economists are taking note, but in popular imaginations, we have probably not understood the kind of shift which has happened in last 5 to 8 years or 10 years. I mean, obviously, it was happening right from 1988, when famously Texas Instrument came in Bangalore. That was the first ever GCC in a way, and the first ever on the Gurgaon side was GE. Famously, it came with Mr. KP Singh, DLF1, right? That was, I think, around about 1991. But those are, smaller anecdotes. The reality is GCC as a trend has accelerated in last 10 years, and they have reached to a critical mass where there is no unwind just because you get it, 20% cheaper. In terms of whether it's India plus one. So China plus one is not for cost, right? It is for strategic reasons, right? So India doesn't have those kind of risk. Within India, they obviously want to always do BCP, which is, business continuity planning. So most of these centers want at least couple of centers in India, and they obviously have local onshoring. Sorry, you call it nearshore. So the technical word for that is nearshore. You don't want graveyard shifts kind of a thing, especially if requires customer face off. So for those purposes, they will all obviously go to some of these lazy little laggard countries like Argentina, Brazil, Chile, and which is a pain. Similarly, one more last thing before Prince I hand over to Ritesh for the the context of the session. Even the Eastern Europe, I mean, they probably have the cheaper labor, cheaper manpower, cheaper human capital, and much smarter than average Indian employee, right? But the only problem is, what about those work ethics, or lack of work ethics, whatever you may call it? Indians can work 7 into 10 very easily for 10 years, or first 10 years of their life, which a Polish guy or Russian guy will probably not necessarily do. I mean, some of them will do, but not everyone will do. So in Poland, you have strict labor law for overtimes. Everyone just takes off after 4. So those are the only countries which can technically compete on some of these tech capability. But there also they have gone quite a bit. In fact, European companies have gone to places like Brussels, Warsaw, Rockla, etc. But at the same time, you might have heard about EPAM. So after Russia-Ukraine problem, EPAM actually moved to outside of Eastern Europe. So please also understand that zone also is very right now in middle of a lot of problems. So that's what I wanted to add. I mean, Prince, in any other space, I can probably expand more, but I'll say it will be very disservice to think of GCC trend as saving cost of 20% here and there. I mean, we are pulling jobs from Singapore, which is hardly 20% costlier than Mumbai, right? But companies are no longer expanding in Singapore for that matter.